Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So it's really been nothing but down since Valentine's Day. So next year, let's just cancel Valentine's Day, move on with our lives. February 14th was sort of the top across the board. Obviously, this coronavirus stuff is roiling legacy markets. On top of that, we have OPEC, Russia, Saudi Arabia dumping oil, wrecking US shale offshore, Canada, Alaska. So there's all sorts of fallout. I think it's hard for any asset to do well when the world is crumbling. That's just my own narrative here. So let's take a look at some other charts. I'm really watching 3 or 4 charts closely. This is one of them. I'm waiting for the VIX to finally top because historically, when VIX comes down after a high or when VIX pops up, it's been generally good times to buy crypto. Obviously not so great here long term. You're at break even essentially from this VIX high to this VIX high, but VIX is just the volatility index, the fear index. This will come down when legacy volatility comes down. Doesn't look like that'll happen anytime in the immediate future, maybe within the next couple weeks. One other thing lots of people are talking about is SPX versus BTC, and you can see we've been very highly correlated. This is 30-day rolling correlation coefficient. Highly correlated over the past, since January. Overall, we're uncorrelated, across multiple years. I think that's pretty clear. But recently, it's definitely extremely highly correlated. So you can't ignore the legacy moves, which is why I'm looking at the VIX, which is why I'm paying attention to what kind of shenanigans the governments around the world are doing to try to mitigate this at this time. Looking at the futures premiums, we've completely reset both the BTC and ETH futures premium. So this is the quarterly premium, the weekly premium. It's gone from positive to negative as we've come down here. Part of this is premium decay just naturally over time. As you get closer to expiration, premium decreases, but it certainly doesn't go to zero or go negative every time. So there's definitely obviously some bearish influence here. The new quarterly contract on OKEx should be this Friday the 13th. That should be interesting. Another chart I don't have is the moon phases. Pop up the moon phases on TradingView and look at that, and pretty interesting. Not something I ever pay attention to other than retrospective, but it's interesting that we just had a full moon. Looking at Tether, you can see that. So this is Tether above $1, Tether below $1. I have a yellow highlight on here when Tether's below $1. You'd expect Tether to currently be slightly above $1 just because of fees and premiums across the board just to deal with Tether. But what I think you're seeing here is finally this matches the assumption that traders are fleeing to Tether as prices are going down. So demand for Tether increases, price of Tether increases. Now you could say that was the opposite here. As prices are going up, supply of Tether or demand for Tether decreases and its price goes down. So I'll be watching this over the next week to see if Tether prices finally dip below $1 consistently. And this is like the 6 to 8 hour time frame. So this is another chart I am watching like a hawk. Over the past 6 to 8 months, we've had several inverted head and shoulders type patterns. We're currently in a macro potential, really ugly, loose inverted head and shoulder that needs to find a bottom between 7, 7.8, 7.5, somewhere in there. You can see we had another head and shoulders here that failed to break down, which is always super bullish when a reversal pattern doesn't break the expected direction. So just as, this, if we get a like IHS formation and then it doesn't break up, that's super bearish, but we're not even there yet as far as the formation is concerned. We're in right shoulder fact-finding mission type territory here. Doesn't look great at the moment, obviously. There's no like massive volume washout. There's no massive wicks. I think this will take a couple weeks to figure stuff out. In the meantime, you can obviously look at the lower time frames, but as it sits here, it's hard to want to take a long position simply based on what you're seeing or what I'm seeing currently. I mean, we broke below the 200. The next chart I'll show where we broke below the yearly pivot. We're out of the massive pitchfork. I mean, this is all bad, like worst case stuff in the near term. So it's hard to expect a massive bullish continuation bounce at this point because we broke all the supports. You know, we were bouncing perfectly on the supports, and then the world started to crumble. So that's sometimes the way that the cookie crumbles, I guess. But yeah, so what I'm looking for here: high volume washout, dragonfly candlestick, tweezer bottom, something, anything. Right now it doesn't look super bullish. Here's the pitchfork and the VPVR and the yearly pivot. You can see we're below everything. Ideally, we want to get back above 8100, 8150, somewhere in there. Otherwise, I really don't have any, there's no pitchfork supports here. There's no 50, there's no 200, there's no EMA supports on this time frame. I didn't look at the weekly 20 SMA. That'd be something else to check out. The weekly cloud, we're also below that. Don't know a chart for that, but it's a giant mess. So we're definitely going to need to stabilize. There's certainly volume supports at 7K, 6.5, but if we break 6.5 with conviction, there's really nothing in between that's high volume. So the concern is always we break 6.5, we go to 4, and then we'd probably chill at 4. That's not an expectation, that's a possibility. I think the expectation now is massive volatile chop until we figure out if we're at support or resistance here at 81. And on the 4-hour, last night I was thinking, is this some sort of diamond bottom pattern? Is this some sort of clamshell thing? When you get this convexity, concavity, I always confuse the two, but when you get this like downward half circle thing, it's usually never bullish. So it's good that we sort of broke the low and then we bounced pretty strongly. Nice dragonfly candlestick on the last 4-hour close. Not really any frank bullish divergences, more of an exaggerated bullish divergence. It didn't necessarily close on a lower low. RSI is based on the closes. So it looks like waning bearish momentum, certainly not necessarily the strongest case for a div. I mean, you can see this lagging span printing like an M. You really don't want to see this make lower lows, or else I think it's 7K. It's really got to find support here. It's got to pattern out somewhere. I mean, we looked really good up in here when we had this 4-hour Kumo break, Kumo edge to edge, and then OPEC destroyed us, coronavirus destroyed us. So we've got to find some stability here on the lower time frames. Taking a look at ETH, this is the chart I've been glued to. Probably not even a really good, great case for an inverted cup and handle, but it measures out to about 175. ETH did have some high volume washout on the 4-hour. Nice lower lows, nice bullish divergence forming here. So it's hard to say whether this will actually reach 175, but obviously if BTC drops, if Legacy keeps dropping, I think 175 is inevitable. It does show signs of waning bearish momentum. Looking at the daily below the 200, about to be below the cloud, definitely back into the bear market territory. I want to see all this reset. It's probably going to take a couple weeks. It's probably going to take us in early April, which is fine. Q1 has been uncharacteristically bullish historically across the board. Q2 is always the best quarter for crypto. Hopefully that trend will continue through this coronavirus pandemic. But right now, too early to call trend-wise. Certainly looks like it's going to roll over bearish, but it's at the 200 support on ETH there. And again, long-term, multi-month, multi-year potential to 750. End of year 2021, 750 is not impossible. It's got to get into the cloud. It's got to hold above 190. I mean, worst case for ETH is it revisits 100 and revisits 50. I don't see that in the near term. But if things really get rolling, those are the supports. And looking at ETHBTC, it's kind of just chilling at the historic support resist zone, just below the yearly pivot into this volume notch. But just like everything else, if this falls below important trend metrics, it's going to get hairy and probably return to that 02 zone, this high volume node here. Probably going to see death cross type stuff. It's probably not going to be too important because everything's going to be massively ranging, massively volatile for the next couple weeks. I think US is just starting to come to terms with the seriousness of coronavirus as we'll see it across the country. Stay safe out there. Self-quarantine. Like, dislike, comment, subscribe. Hit me up on Twitter, and happy trading.